I mean, I agree with you. I'm not sure I like this cost of living crisis phrase. I mean, maybe the pound in your pocket, they used to call it, I think, back when I were a lad. But I mean, I suppose essentially it's about having a disposable income shrinking and actually a negative disposable income. And we've all heard all about this. Many people have heard it. Many people have felt it. Many people have seen it when it comes to paying their bills. But ultimately, you as someone who's got your head around this, we hope, what's the way of the most effective, efficient, quickest, simplest way of getting around this so that we can start to actually push back and find that we've got a little bit more than we need every week rather than a little bit less, because that's actually what it's all about, being able to pay the bills and have a decent quality of life with a few pennies in our pocket. I mean, we had a report from The Independent last week saying people have got a really bad quality of life. They can't afford to do simple things like go to the pub and go out to the cinema, for example.
Yeah, and that's bad for the rest of the economy, because those are the things that the rest of the economy needs, the retail economy needs, to survive itself.
So how do we fix it, Andrew? How do we fix it?
I think there are two or three simple things. One, this government came in and it immediately raised VAT. It doesn't talk about it now at all. It talks about how they've raised the tax threshold at the bottom. But actually they put VAT up from 17.5% to 20%. Now that immediately put up the cost of living for everybody. And VAT is a flat tax. Everybody pays it at the same rate, at 20%. And it's a tax disproportionately that hits the lowest paid, because proportionately more of their salary and spending goes, they have to spend their salary in order to survive, and they get hit by VAT. So reduce VAT as a regressive tax, that'd be one thing. The living wage is important. I mean, there were figures out yesterday, something like 43% of people in Ian Duncan Smith, the Work and Pensions Secretary, in his constituency, aren't paid the living wage. Now, if you pay people a decent salary, they will spend it. and that's the simple fact of, people need to spend money in order to survive if they're on low or medium incomes. They don't hoard it, they don't put it offshore, they don't invest it in speculative, markets abroad. They spend it in their local economy. And that is a really important thing. And that's why we're in the mess we're in to a large extent, because this was going on before the crisis and has continued and, in fact, intensified through it. So the living wage is a very important thing. And there's I paraphrase, but it's a quote from Bob Crow, recently departed Secretary of the RMT union. He said, why is it that there's a minimum wage that doesn't pay the basic standard of living? If there's a living wage, surely that should be the minimum wage. Otherwise, we're not a dignified society and we just let bosses off the hook. And I think he's right, because how is it that there can be a living wage, which is the basic standard that people need in order to live a semi-decent existence, and that is way above what our minimum wage is? I mean, that's deeply problematic. So it's a pound in people's pocket, and the same thing for people who are on benefits. We've decided throughout this crisis that people on disability benefits and unemployment benefit must pay. Their benefits have been capped at 1%. Their standard of living has gone down, and from a very low base. These are people in poverty who are claiming employment support allowance or job seekers allowance. So we actually do need to raise benefit levels as well. But the other thing about raising wages is actually you cut benefits. And the reason you do that is because a lot of people in work are having to rely on tax credit and housing benefit just to keep a roof over their heads. And that is really, that is the state subsidising low pay and extortionate landlords. And I see no reason. I don't think when William Beveridge and Aneurin Bevan and the Attlee government created the welfare state, they thought it was to prop up low-paying employers and rich landlords. But that's what we're doing. So there's a whole range of things we can do, but there's a kind of silence.
Yes, finding the political will. Just to move on to another topic, Andrew Fisher, there was an interesting report in the US, I think it was in the Washington Post the other day, 5 banks in the US failing the Federal Reserve stress test. Even after having been bailed out, these banks, they're now starting to look like they're teetering again. Is this real? Is it possible? Is it going to be feasible to bail them out again, or this time is there going to be no choice but to have a crash?
I think that's an interesting question. I think it's a question that will hit Britain within the next couple of years as well, because if interest rates go up in the UK, then there are a lot of people who are on the brink with their mortgages, who are, struggling to meet their mortgage costs. I mean,
but let's just focus on the US for a second, because if these banks do go down in the US, it's going to just be like a tsunami coming across the Atlantic.
It depends on the size of those banks, absolutely. I mean, if they are the big international banks, so
we're talking about Citigroup. We're talking about Citigroup. Sorry, but we're talking about Citigroup, HSBC, North American Holdings, RBS, Citizens Financial Group, Santander, and Zions Bancorp all failed the Federal Reserve stress tests last week.
And it's hardly surprising, because in the US you've got the same phenomenon happening. People's wages aren't going up, and therefore they're borrowing more, and they're getting into more debt. And when people default on those debts, the banks have to write off those losses. If people haven't got the assets or the income in order to pay them, they have to be written off. And when banks have to do that en masse, then other banks don't lend to them because they realise their asset base is weakened, and that's what happened in what we called the credit crunch.
So I suppose what I'm saying is there enough money for another bailout if these banks come back and say, well, sorry guys, we've been fined so much that we're going to have to ask for another bailout, otherwise we're going to explode?
I think the answer is quite clearly no, and the question therefore is what would governments do differently this time, and that really leads to some very unpalatable choices. You either go down the kind of Greek route, I suppose, which is you really start smashing into the welfare state and public services on a scale that even we haven't seen here, or you do what I suggested earlier, which is you nationalise them and you start operating them in the public interest.
I suppose that means that those cash points stop becoming HSBC cash points and they just become British government cash points, and the government is so-called, anyway, safeguarding that cash. Anyway, I just wonder what your thoughts are about the economic climate for the next year or so, and whether you think that the economy will be in a decent shape by the end of the year and in time for the next election, Andrew.
I think we're headed for another crisis, and that may or may not come this side of the election. It may come the other side of it. What's for sure is that our economy is not in a good state. And again, I go back to what I said earlier. How do you measure this? Do you measure it in terms of GDP, which is basically the amount of money flowing around the economy in different transactions? That's one measure. It's very hard to measure. The ONS, who measures it, says it's difficult to measure, and it's and so therefore the accuracy of it, the figures are constantly revised.
What occurs to me is that they're relying on the banks, and we know that sometimes those figures that are circulated on balance sheets aren't actually the true accurate figures.
Well, I mean, effectively the valuation of the banks pre-crisis was the valuation of scam artists. That's what it was. I mean, we bailed out the valuation of scam artists so that shareholders and the large investors in banks, people who had hundreds of thousands or millions of pounds in the bank, were bailed out. But I think the real crisis, if you look at the fundamentals of the British economy, it's incredibly weak. We have a low-skilled, low-pay economy where people's living standards are falling. Unemployment is at historically high levels, even though it's dropped slightly in recent times. Those fundamentals aren't going to change between now and the general election.
And so it sounds to me like you're saying that really government intervention, nationalisation is going to be the only option at some point.
It's the only option I think that's palatable to the electorate, and I think if it happens pre-election, then I think that will be the way they have to go, because the other option is you get into the kind of Greek situation whereby you're flogging off islands, and you're cutting the basic state pension by large percentages, laying off hundreds of thousands of people all over again. I just don't think that's politically feasible in this country at the moment. Okay,
Andrew, could you just tell us about your book and when it's out? It's The Failed Experiment.
Yeah, it's out on the 20th of May, and it's really a book about the economic consensus that led to the crash. So I think there's been a lot of kind of quite glib, and it's not entirely unfair, blame of the bankers and speculators and spivs in the city who caused the crisis. But we've got to take a bit of responsibility and empower ourselves in this as well. And it was politicians who let that happen. Politicians decided to deregulate the finance sector. They decided to flog off most of their levers over the economy, most of our industry, to abandon any idea of an industrial strategy, of managing the economy in any way, shape or form. They said that the market will do it. And politician after politician for the last 30 years has done that. And so the book is about rejecting that consensus, looking at the damage that consensus has done, and then suggesting an alternative. And that's an alternative that reevaluates our whole economy. What is it for? Is our economy about making, a few people in the city multi-millionaires, or is it about providing a decent standard of living for every citizen in the UK? I come down on the latter side, and I think that's what a democratic economy should do, And that's really, I guess, the argument is, do we want an economy that's democratic, or do we want an economy that is the law of the jungle?
Okay, former parliamentary researcher, now writer, a book called The Failed Experiment. Andrew Fisher, thanks very much for joining us on the Politics Show this evening.
Thanks very much.
Getting bigger by being better. The number one choice for Bristol. This is BCFM 93.2.
Martin, I have to ask you what you make of that analysis of things.
Well, it's obviously I agree with a great deal of it. I think the real problem is that we should have been doing all these the things that he was suggesting in the last 5 years. It's getting later and later. And another point I would make is once you've bailed the banks out, you're no longer in a free market philosophy anyway. I mean, some of the serious free marketeers know very well, because once you've bailed the banks out, the allocation of resources beyond that point simply becomes a political allocation of resources. Nothing to do with the market at all. So all these people who are making money are not making money because they deserve to have it. They're making money because they have the political power to insist that they are bailed out. And of course the bankers have a great deal more power than the unemployed and people of that sort. And it's nothing to do with the market at all. I mean, intellectually that is defeated. It's gone.
Made in Bristol. This is BCFM 93.2.